It's a ticking time bomb for contractors, confused about IR35 tax changes and what it could mean for your income. Here's our guide. Contractors have been cutting tax bills by working as limited companies, but IR35 seeks to stop disguised employment, and fresh down is coming 42% of business owners unaware of the fines for non-compliance. A quarter of clients say they will put freelance projects on hold because of IR35. Juno warns changes are the tax equivalent to GDPR for the market. B. Angelique Ruzicka for thisismoney.co.uk. Published 7:38 British Summer Time, the 30th of July 2019. Updated 12:17 British Summer Time, the 30th of July 2019. Self-employed workers, such as IT experts and business consultants, could soon see their income hit thanks to changes in tax rules that will be introduced in April. IR35 rules seek to stop so-called disguised employment, whereby people work for firms and organizations as contractors using intermediaries, such as limited companies, which can slash tax bills for both them and their employer. This is permitted where contractors or freelancers work for numerous different firms, but not when they are mainly working for just one and would normally be an employee with pay tax. The new rules will force private sector companies to be responsible for deciding if a freelancer or contractor's employment status is correct, rather than the individual deciding it themselves. This is already in the public sector and has led to a big down on limited company contractors. Meanwhile, HMRC is going after those considered to have aggressively flouted the rules. According to tech and freelancer platform Juno, changes to IR35 could reduce a freelance worker's net income by 25%, but few know the impact it could have on their business. A contractor working through a limited company can pay corporation tax at 20% on their profits, claim business costs against their tax bill, avoid paying national insurance, and pay themselves a lower wage topped up with dividends. It also cuts tax for employers, who can avoid paying their NI contributions and mandatory employment benefits such as sick and holiday pay and pensions. All of this can cut a worker's tax bill substantially. Although changes to the dividend tax-free allowance and tax rates make it not as lucrative as it once was and increased the threshold at which becoming a limited company becomes worth it for people. However, there has been a great deal of criticism of those using the company tax system to avoid tax they would otherwise be paying, while to all extents and purposes taking no entrepreneurial risk. Albeit, they will not get sick or holiday pay, or pension contributions. The changes will make life harder for contractors and freelancers who want to work as a limited company. However, many may not realize how much they could lose before it's too late. More than two-thirds of freelancers are unaware of the impending changes to IR35, according to new research produced by creative and tech freelancer platform Juno. The changes to the IR35 legislation, which will take effect from April 2020, aim to tackle disguised employment, where businesses hire freelancers rather than employing them as staff, but few know the impact on their businesses, which could result in some freelancers paying £9,000 more in tax, although those who genuinely are providing a service to multiple companies should still be able to continue working as a limited company. Sheeb Matthew, chief executive at Juno, says, "We know the majority of freelancers make this career choice for the freedom and flexibility it offers, so it is troubling to see so many unaware or uncertain about the important financial impact these changes will bring. The introductions are a ticking time bomb for freelancers who fall foul of the regulations and could be the tax equivalent of general data protection regulation in terms of admin for clients. If IR35 applies, it could reduce a worker's net income by up to 25%, costing thousands of pounds in additional income tax and NICs. If you're still unsure what IR35 is and how it impacts you, here's our handy, simple guide. What do the IR35 changes mean? This is not new legislation, as IR35 has been in the pipeline since 2000. However, it has taken a while for the legislation to come into force. It applies to freelancers from April 2020 that have structured their business as a personal service company, PSC, or limited company. It will mean a change in the way that they pay their tax. James Orpin, director of Juno, explains, from April 2020, income tax and national insurance deductions can in some instances get deducted at source. IR35 does not apply to sole traders or freelancers who use umbrella companies. Currently, freelancers that are using a PSC structure are responsible for their tax affairs, but when the law comes into force, their clients will make the decision about whether the freelancer will be taxed at source or paid gross. Clients could lose money as they experience huge administrative pressures, driving up internal paperwork and recruiter costs. James Orpin, June Orpin says, if it is deemed that on a specific contract that the freelancer is inside of IR35, they will be taxed at source, income tax and NI, and the freelancer will have less money hit their bank account. It also takes away from contractors certain, perfectly legal, tax planning abilities, for example, the ability to take a business risk running their small company and take the money out using dividends instead of salary. You don't pay as much income tax and national insurance on dividends as you do on salary. Clients could also lose money as they experience huge administrative pressures, driving up internal paperwork and recruiter costs. Will freelancers lose more business? This could certainly be the case if businesses haven't factored in the potential impact of the changes by IR35. Paul Falvey of BDO says that small businesses could be exempt from the IR35 changes provided they meet certain criteria. Juno's research looked at agencies who regularly hire freelancers. It found 43% of senior personnel didn't know how IR35 would affect their business, with 42% unaware of the fines for non-compliance. Juno says that a third of business owners and executives admitted they were worried about understanding the legal responsibilities, while 28% said they would research the impending taxes on Google, rather than ask HR or accountancy experts. It adds that 40% said the changes would have a moderate to severe effect on business when introduced next April, while a quarter, 24%, said they would put projects on hold as a result of the change. She adds, it is wise that both freelancers and clients understand the IR35 changes now, either to prepare for the financial impact or to change the way they work with each other to minimize the effects. Are small businesses exempt? According to accountancy and business advisory firm, BDO, the Treasury forecasts that the additional tax this will collect is £3.12 billion over 4 years from 2020-21 to 2023-24, demonstrating how much it will cost business. The good news is that there is a proposed exemption for small businesses. Companies are defined as small under the Companies Act 2006 if it makes no more than £10.2 million in turnover, has a balance sheet total of no more than £5.1 million and hires no more than 50 employees. Paul Falvey, tax partner at BDO, explains, it is helpful that the proposed exemption for small businesses seems fairly straightforward. They must test themselves against the Companies Act thresholds at the end of their accounting year. If they qualify as small, then they are outside the rules for the whole of the next tax year. For example, if you are small for your accounting year to the 31st of December 2019, you do not fall within these rules for the 2020-21 tax year. What happens if I have a dispute? The legislation has factored in a means of dealing with disputes. The client must tell the PSC worker if they are treating them as a deemed employee. Falvey adds, the formal process will allow the individual to dispute the decision and the client has 45 days to respond, and either change the decision or explain their reasoning for it. While this is helpful to PSCs, unsurprisingly, HMRC will not get involved in this process, so it will clearly put a further administrative burden on businesses who have make these decisions. Where can I find more information? The HMRC have promised extensive support and guidance for businesses. Use their Check Employment Status for Tax tool to check if you or a worker should be classed as employed or self-employed for tax purposes. Read more. Toggle search I want to find.